move on and introduce you to our guests and panelists today. My name is Derek Granger. I am one of the managers at PFP R&D. My job is to help accountancy firms to maximise the amount of potential claims that they can make and to identify clients within their client base who qualify for R&D and help them to make more claims. To my left is Alex Price. Alex, how are you doing?
I'm doing very well, Derek. Thanks for inviting us here again.
You're very welcome, and that's a lovely picture of you.
Indeed. No rugby ball today, though.
Yeah, let's not talk about the rugby. And to my right is Malcolm Henderson. Malcolm.
Oh, good afternoon. Thanks for inviting us, Derek. And I haven't got the times yet online, so thank you.
Yes. So what we're going to do is I'm going to just pass you over to Alex first of all, and he'll just give you a little bit of a kind of background in terms of his role and what he does at Forest Brown.
Excellent. Well, thanks, Derek. So good afternoon, everybody. My name's Alex Price. I'm a director at Forest Brown. For those of you that don't know, Forest Brown is the strategic partner of PFP, and together we form PFP R&D, which is obviously who's bringing this webcast to you today. Forest Brown is a R&D tax consultancy firm. It's all we do, and we're based in Bristol, but we operate nationally. A lot of the accountants on this webinar might have spoken to me in the past, because one of my main roles at Forest Brown is to look after our partnerships we have with accountants, which we feel are incredibly valuable. We have a lot of referrals coming from accountancy firms, so to make sure that we have a great relationship with you is my key responsibility. So if any of you do have any questions after the webinar, feel free to take my contact details and get in touch with me. We've got a large team in our Bristol office. We're now up to about 60 people. 40 of those are tax qualified, and we come at R&D from a very tax-centric focus. You know, it's a claim that is reviewed by the revenue. We have people like Malcolm on the team, who I'll introduce in a minute. But what we want to do is make sure we get the tax right. The world of tax is getting ever more complicated. For example, we've just been getting our heads around the new the loss relief regimes that are going to be impacting us moving forward, and just trying to work out how that's going to impact on R&D tax relief. And you know, maybe I'm looking at Derek now. Maybe that's a future webinar there in terms of how the new loss rules are going to impact R&D. But today we're going to be talking about R&D, tax relief and grants, which is incredibly complicated. And therefore, I'm quite pleased to have Malcolm by my side, who's an ex-revenue inspector. So Malcolm, would you like to introduce yourself?
Good afternoon. Thanks, Al. Thanks, Derek. 26 years in HM Revenue Customs, the last 8 as a R&D unit inspector, trainer and team leader. Joined Forest Brown in March 15. My main role is QA, quality assurance, to make sure that the claims look reasonable and robust from HM Revenue Customs perspective.
Excellent. So before we go any further, a lot of you will have listened into our webinars in the past and will know how they work, but there is a panel at the side where you can enter questions if you want to ask any questions. We will be having a Q&A session at the end, but if you do have questions as we go along, if I think it's a good point to ask the question, then I will bring them to the guys as we go through. We are also going to be doing another one of our podcasts, which is a relatively new thing for PFP. We've been doing them, I think we've got maybe 8 or 9 of them now. So after this, we will be recording a podcast where we'll go through any of the questions that we haven't managed to get through during the hour that we have with you. So I would strongly recommend that you listen into that and register for them. You can do that if you just Google PFP online podcasts. You should be able to get that through the likes of iTunes or SoundCloud. But anyway, we'll move on from that, and I'll pass you back over to Alex to explain what we're going to get through.
Great, thank you, Derek. So today's agenda is going to flash up on screen. So as I said at the start, we're mainly going to be talking about R&D tax credits, relief, and how it impacts with grants. Before that, we'll do a little bit of background and context, because there might be some people on the webinar who only have limited information about what R&D tax relief is. So we'll just run through some of the basics there just to get you up to speed. Then the main bulk of the presentation will be about the interaction of grants with R&D tax. As I said, this can be really complicated, and it's key to get this sort of analysis correct. Then Malcolm is going to talk a little bit about the HMRC review process. So obviously we can utilize Malcolm's experience in terms of seeing how the revenue treat R&D claims where there's a grant. I think that would be some really important insight there for you guys. And then finally, as Derek mentioned, we will have a Q&A session where we're probably hoping that will be 15 minutes by the time we get through the slide deck. And Malcolm and I will try to answer as many questions as we can. If there's any unanswered questions at the end, what we generally do, we get a download of all those questions, and we try to reach out to you to answer any of those specifics that you might have. So feel free to shoot those questions over to us, as we go through the slide deck. So, what is R&D? What is R&D tax relief? Well, I think the important thing is it's an incredibly valuable tax incentive to reward companies who are innovating. I think there's a couple of keywords there. The main one for me is tax incentive. It's something the government and the Treasury and the revenue really want companies to be aware of, and really want companies to claim where they are carrying out qualifying activities. We can see that the economy is facing some headwinds. We've got Brexit, we've got all sorts of issues. The role of the government is to try to improve the economy. One of the ways that they see this happening is through increasing innovation, increasing R&D in the UK to strengthen the economy, to increase the knowledge-based economy, and to help, I suppose, the UK balance its books, export more, and take its place in the global economy. So as I said, it's a tax incentive. It's run through the corporation tax system, and effectively you claim R&D tax relief on your CT return every year if you've been doing qualifying activity. So there's two sort of key areas to think about. What's a qualifying activity? And following that, how do you quantify a claim? So we've got a little slide deck up there at the moment which talks about the guidelines. So what is R&D? It takes place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainty. So that is the definition. It's found in the BIS guidelines, BIS there being the old Department of Business, Innovation and Skills, which is now being rebranded as the Department of Business, Energy and Industrial Strategy. So these guidelines were written about 16, 17 years ago, getting a little bit long in the tooth. And sometimes companies look at the BIS guidelines, read through them, and get the impression that you can only claim R&D tax relief if you are a rocket scientist, or if you are, in high-end pharmaceuticals, or you're designing amazing artificial intelligence systems. That's not the case. The guidelines are wide in how they're drawn up, and many companies qualify where previously they didn't think they did. We've got many copies of the BIS guidelines back in our office, so if anybody wants me to email a copy through to you, please let me know and we can send that over to you so you can have a look. It is obviously freely available online. If you just Google BIS guidelines for R&D, you can get them up there. Obviously, we've got a set that we can send through to you as well. So what's that mean in practice? Effectively, an advance. So an advance in science or technology can be the creation of a new product, a new process, or a new service, or a new system, or it could be improving things that already exist. So I think if you break it down to think of, is it something new or is it an improvement, then that actually can capture an awful lot of things. So if you're improving, I don't know, a piece of furniture, or improving a bit of software, or improving a construction process, then potentially you could be claiming R&D tax relief. The next step in that qualification process then is to think about, are there technological or scientific uncertainties that have to be overcome? So effectively, you could think of that as problem solving. In making something new or improving something, has somebody had to solve a problem? It gets a little bit more complicated than that. The problem has to be fairly complicated, and the person solving the problem has to be, have relevant experience and skills within that trade. But if you've got those three sort of things going on, the creation of a new product or an improvement, there's problems to overcome, and those problems are being overcome by, let's say an engineer or somebody who's a software developer, then you're looking as if, that should be really something to think about in terms of qualification. So that's qualification. What are they worth? How do we quantify them? So we've got a nice little slide there that talks about the various schemes, the various tax credit relief schemes. Comes down to two schemes, really. So you have the SME scheme, small medium enterprise. That's on the left, and as you will see, for a profitable SME, worth about 25p in the pound. So 25% of expenditure, very generous. For a loss-making small medium-sized enterprise, it's up to 33 pence in the pound, so even more generous. So as you can see, it's a very, very generous incentive, which is why it's really important to be able to raise this with your clients, because you don't want your clients to be missing out on money that the government wants to give them. So in terms of thinking of your client portfolios, just think about, have you got any clients who have been doing anything new or improved? And, then you should really start thinking about R&D tax relief. And then on the right-hand side, we have the large company scheme, also called the RDEC scheme, the Research and Development Expenditure Credit. And that's worth around about 10p in the pound. So still generous. If you think of a really large company spending hundreds of millions on R&D, then they're going to get some generous support from the UK government. Obviously not as generous as the SME scheme. And this is really, really relevant here, because depending on how the grants interact with R&D tax credits, you might find the situation where a company flips from one scheme into the other. So you could have a company that's expecting to be getting 33 pence in the pound through an R&D tax credit claim, ending up only able to claim 10p in the pound. So quite a big difference, and that can cause some problems and some shocks for some companies who are factoring in perhaps in their financial planning an SME relief when they're going to end up with an RDEC relief. So as we carry on, we're just going to do a little bit of a comparison now between R&D tax credits and grants in terms of the bigger picture, in terms of what a credit is, what a grant is, and some of the things that need to be thought about by companies claiming. So we got a nice little table there, and that sort of summarizes the difference between R&D tax relief and grants. So we'll just run through those rows. So the first one, is it competitive? So R&D tax relief is not competitive in that if you are qualifying, you send your claim to the revenue, and unless Malcolm has any questions, then the claim is processed and you get your R&D tax relief. At the moment, the government is really keen on companies claiming R&D tax relief, so the pot is pretty full. They've not exhausted the pot in terms of how much is given out every year, and a lot of money is given out every year. Whereas on the flip side, you have grants, which are competitive. So usually a grant is a competition, and there might only be limited resources to give out. So it might be only 1 in 5 applications receive a grant. It might be 1 in 10, it might be 1 in 20. And obviously there's only a fixed amount of money that can be given out. So whereas R&D tax relief, you are not up against anybody. With a grant, you are up against perhaps competitors. So availability, R&D tax relief, as I said previously, is always open. It's linked in with your corporation tax return. In fact, it's a corporation tax relief. So therefore, it's open every year, and you just slot your claim onto the CT600. So always open. A grant will have open and close dates, and you often see them publicised to say, for example, Innovate UK might be holding a competition to receive or to give out funding for some AI technology. The grant application process might open up on the 1st of March 2018, and it might close on the 30th of June 2018. So 3 or 4 months to get your grant application in. So as you can see, R&D tax relief, it's always available. Grants come and go depending on the funding bodies and priorities. Then Then the next row is the percentage of the relief. So as mentioned previously on that earlier slide, R&D tax relief worth between about 10 and 33% of qualifying expenditure, whereas a grant, and this is where grants can be very generous, you can get up to 100% of your funding for research through a grant process. I haven't really seen many 100%ers. Have you, Malcolm?
No, it's normally 2/3, something like that.
Yeah.
At best, we often see. Yeah.
Yeah, absolutely. And usually, I think a lot with the grant funding is it's basically you spend 50%. The grant funding body will then give you 50%. This sort of match funding. So that match percentage can be slightly different. So sometimes you see 30% match funding. So if you spend £100,000, the grant body will give you 30% of that. So that's the way that works. Does the size of the company impact on the credit or the grant? Simple answer there is yes. As we mentioned earlier, there's two R&D schemes. So SME or large company with those different rates. Probably worthwhile quickly mentioning what an SME is for R&D tax relief. So you're looking for a company with fewer than 500 employees, turnover less than 100 million euros, and a balance sheet of less than 86 million euros. So in my opinion, that is still a really big company. An SME with 499 employees is going to be a pretty big company to manage, isn't it? Really big. Anything over that is large company. And then grants, yes, depending on the actual grant, what's being given out, and the funding body that's giving that out, you can have a lot of restrictions on company. It could be open just to micro companies, 5 employees or less, or it could be open to just companies with 15 employees or less, or companies that have only just incorporated. So there can be quite a lot of restrictions on the grants being given out there. Timeframes. So importantly, R&D tax relief, you get up to 2 years following your year end to claim it. Obviously, you're looking at the general rules on when a corporation tax return has to be filed and how long you have to amend it. Here's probably a good time to mention that we've got the 31st of March upon us soon. I know it's only just been January, and a lot of you would have been really busy with January. But you're probably gearing up for a busy March period as well, with so many companies having a March year end. The important thing to note there is if you have a company with a 31st of March year end, they will be losing their entitlement to claim for the year end in 31st of March 16 at the end of March this year. So probably worthwhile a little pause here just to emphasize that if you've got any clients that you think are doing R&D, raise it as soon as possible, because you've now got about 6 weeks to get a claim in. Doesn't give you much time, and as we've mentioned previously, R&D tax relief is very generous, and I'd hate to think of companies missing out who are doing qualifying activities.
And I was just going to say there, if I may, we could be talking about expenditure as far back as 1st of April 15, nearly 3 years already. So March 16 could be quite an important year for a company to make a claim.
Yeah, of course. And then carrying on with the comparison here, we have timeframe to claim for grants, obviously before the project start date. So you have to get in your application obviously before it starts, so you can then enter into the competition. And obviously it's a case of making sure you know when particular grants are given out. Next row there is different R&D levels. So under the BIS guidelines, which I mentioned earlier, the qualifying criteria, there's no real assessment of what is a different type of R&D level. It's very binary. You're either doing R&D or you're not. And the BIS guidelines talk about the sorts of activities that count as R&D. So there's no real distinction between very high-end R&D compared to very low-end R&D. It's just a binary sort of set of guidelines. With grants, they do try to actually assess the technology level. So perhaps there you could be looking at some, I hesitate to say basic software development, because I think in my mind, all software development is pretty tricky. But there might be some areas where software development is a bit more straightforward than perhaps some of the really high-end stuff. To hark back to artificial intelligence, it's out there at the moment. There's lots of people talking about AI. We've done plenty of claims for companies doing artificial intelligence, and it seems incredibly difficult. So you kind of think about technology levels there of 10 on that scale of 1 to 10.
Yeah, I was only going to say it's back to Al's thing a little bit earlier on about what R&D is. Don't discount any sector within reason. The BIS guidelines discount very few sectors: arts, humanities, and possibly maths. So just consider any of your corporate clients and speak to us about that.
Yeah. And then the last bit, notified state aid. This is the important bit, and we'll just mention it briefly here before we go into this in more detail. The SME scheme, the SME R&D tax relief scheme, is notified state aid. The RDEC scheme is not notified state aid, so just remember that. Some grants are notified state aid. Some grants are not notified state aid. So just have a quick chat about some of the different grants that are out there, because there's an awful lot of grants, and knowing what they are is key to being able to analyse how they should be treated and then how that impacts on the R&D tax relief claim. So we've just listed a few different types there. We've got some on the left-hand side. So we've got project-based grants. These aren't related to job creation. They're just related to projects. So, for example, a company might be trying to develop, let's say, a newer clean-burning diesel engine. So that's a project. And then you could be able to get a grant from people like Innovate UK, which is UK. There are then other bodies. There's EU frameworks. Some of you might have heard of Horizon 2020. These are partnerships and strategic funding frameworks coming from the EU. There's also structural funds, European structural funds, and then also some of the Welsh grants that we've seen are relating to projects, relating to specific bits of work. So as I said, clean burning diesel engines, perhaps also things like sonar for navigation in maritime waters, things like that. You can understand the concept there. Then on the other side, we have slightly different grants, which are sort of, I guess the best way to talk about them is to call them investment grants or job creation grants, where it's perhaps not really tied into a specific project. It might just be tied into, as a company, you are promising to take on 8 software developers. Or as a company, you are going to take on 5 project managers to manage some construction work, or things like that. And these can come out from the UK government. There's regional growth funds. There's local partnerships as well, local enterprise partnerships. And they're different to the project-based grants because they're more about this sort of investing in companies rather than investing in projects. And then obviously down the bottom right-hand corner of that slide, we've got a few other sorts of grants. So we can see capital grants, so for capital expenditure. Sometimes we see training grants, so to give companies a little bit of assistance with training, whether it could be health and safety or personal development. There's a whole host of those. Obviously R&D grants, which is why we're here talking about this, and potentially environmental grants then to sort of, if you think about it, you see things like office blocks putting solar panels on, sometimes perhaps a wind turbine, better or cleaner water supplies. And they're grants to try and help companies with their CO2 footprint. So hopefully that gives you all a little bit of an oversight in the many and varied type of grants out there.
One of the questions just coming in there,
yeah.
Alex, on the Invest Northern Ireland grants, are they notified state aid?
Yeah, you'll find that the vast majority of UK government grants are a notified state aid, Invest NI being one. Quite often they'll get their money from the EU, but the UK entity will choose who receives it. And that's when it often turns it into a notified state aid and can present substantial problems for SME R&D tax relief claims.
And on that, I assume then that it has to be taken into account when looking at an R&D claim then?
Absolutely. What we really do like to see is at Forest Brown is all the paperwork, so we can actually sort of quantify the impact and minimise it as much as possible for any R&D tax relief claim.
Excellent.
Cool. That actually brings us nicely onto this slide. That's a nice segue, so a good question to ask. What is notified state aid? So we've mentioned it earlier. So the concept of notifying state aid is a grant awarding body must notify the EC of grants awarded by a country's government so as not to distort the market. So fundamentally, it's boiling down to competition law and not distorting the market. So we've listed a few of the grant schemes out there, and whether they are notified or not. So as you can see, grant schemes, we've got de minimis, so these are small grants. That's not notified state aid. Framework and Horizon 2020.
Not state aid, it's
Yeah.
simply a pound for pound subsidy.
Yeah, so that's not not notified state aid, and it's quite a hard sentence to say that. European structural funds.
Yeah, again, we'd like to see the paperwork
Okay.
to make up our minds as to how it impacts on the R&D claim for the client.
Yeah, so for those ones, it can be a bit more complicated than just being able to give an instant decision. Innovate UK.
Yeah, the vast majority are a notified state aid,
Yeah.
probably about 99%. They
Yeah.
do some vouchers, which we can look at and
Yeah.
might not impact too much.
Okay, and then investment grants as well, similar.
Again, similar. We really want to see the paperwork.
Yeah. Okay, so what we've got there is the concept of what notified state aid, and then as you've probably gathered, there is a bit of complexity here, apart from perhaps de minimis and Horizon 2020, then...
I was only going to say, just because it's a small grant, i.e. £10,000, doesn't mean to say it's de minimis. It could still be state aid because a UK entity is chosen who receives the EU money.
Yeah, that's a really, really good point. Okay, so what is the impact of a grant being notified state aid? So back to the CURD manual. This is the manual that the inspectors use. Malcolm probably wrote this. So,
I read it a lot.
So if a company is in receipt of notifiable state aid for an R&D project, it cannot claim any other state aid. This is to avoid the company receiving more state aid than is permitted under the state aid accumulation rules. And there we have the main point. The SME R&D tax relief scheme is a form of notified state aid. So we're all kind of getting to this point. Effectively, what we're saying is, and the previous slides were building to this, the SME R&D tax relief scheme is notified state aid. A lot of grants are notified state aid. And as this says, you can't have two sets of notified state aid on the same project. So what this means in practice is that if you've got a grant, it's unlikely, although it's still possible, that you can't claim SME R&D tax relief. And this is where things are really starting to get a bit more complicated in terms of what happens next. There's a lot of people out there who think that if you have a grant, you cannot claim R&D tax relief. That's wrong. What it means is you might have to claim the R&D tax relief under the large company scheme or the RDEC scheme at 10%, which is obviously a lot smaller, or it's going to give you less than the SME R&D tax relief scheme. So hopefully we've built up to this point, and you're still with us. If you do have questions, let us know and we try to answer those. So what we're going to do next is talk about some specific examples of how a grant can impact on the R&D tax relief scheme. So the first one, somebody's had a grant, but it's not related to the R&D project. Malcolm, what would you suggest there?
Well, firstly, I would suggest that you ask us to have a detailed look at the paperwork to see exactly what the grant is for. Job creation, job protection, etc., that sort of thing, to see how much of the R&D claim and the client's projects are tainted by the grant or potentially tainted. And our expertise can come in there to actually make sure that we maximise the R&D claim for the client and reassure HMRC at the same time.
Excellent. Yeah, definitely. If it comes through that, once on review, that grant is not related to the R&D project, then there's going to be no impact on the SME claim. But obviously, it's getting to that point. It's getting to understand that point that's important. Next one is some notified state aid that is very broad in application. So alarm bells here. So
absolutely,
if somebody's got some notified state aid from a grant, that is very broad, so it applies to perhaps all aspects of what the company is doing, then this is probably the worst case scenario, in that it's likely that an SME claim is scuppered and any R&D tax relief would have to go through the large company scheme. I think what's important to note here, and this is something that Malcolm mentioned to me just before we started, and he's raised here, is you could have a claim, some notified state aid that's worth just a minimal amount, £20,000, but it could scupper an R&D tax relief claim for the next 3 or 4 years.
Absolutely.
Which could, if the average claim at the moment for SME is 60,000, let's say a company loses out in 3 years of that, £180,000. So they've missed out on that, but they've got a £10,000 grant. It's not ideal, is it? And I think one of the things that's key to note is, what we like to do as well is be very proactive about grants. Some grants are really fantastic, but I think a company really needs to know what it's getting into before it goes down that application process, because you can't pay a grant back. Well, you can pay a grant back, but it doesn't actually impact on the analysis. So a company knowing what it's getting itself into is really important. So, we can help you there if you've got any clients in this position or you'd like to know more about that. Notified state aid, that is project specific. A little bit better here.
Yeah, I mean, the client could have 5 R&D projects. They get a grant for one. It's a notified state aid. So only the one project is tainted by the grant. The other 4 can still claim under the SME scheme.
Yeah.
And it's back to our second bullet point in a way. If the grant protects 37 jobs or creates 37 jobs, we might have to drill down to see what projects those employees work on, for instance.
Then the next one that we see frequently is de minimis grants. So as was seen on the previous slide, these are grants under a certain limit. And I think in that case, what you're looking at probably is just the funding that came through on the de minimis side would be treated as large company RDEC scheme. The rest of the project expenditure could be included under the SME relief. So not too much of an impact there, really.
No, it's a pound for pound reduction. So if the client spends £20,000 on R&D and receives a £10,000 de minimis grant, basically they'll still claim £10,000 under the SME and the remainder under the RDEC scheme.
Yeah.
So, and it's normally just per year, so we only have to look at each year receipts basis. So.
Yeah. Okie doke. And then, nice and easy, a grant that is not notified state aid.
Yeah, here we know that, for instance, Innovate give vouchers of up to £5,000, and quite often that's for something like exhibiting your goods abroad, travel subsistence, that sort of thing. So, although we like to have a look at that, then we're pretty confident that doesn't impact.
One of the questions coming in just now is what is qualifying expenditure?
Oh, yeah, great question. We kind of skipped over this at the start. We talked about qualification, but not so much about quantification. So costs that qualify, and the legislation is fairly tightly drawn, is staff costs, so gross compensation, employers, national insurance, any pension contributions made by the company, potentially reimbursed business expenses. Then the next category of costs are things like subcontractor costs or expenditure on externally provided workers. The next category is things like consumable items. So those are items consumed in the nature of the R&D. So you're looking at heat, light, power, potentially materials that are used in prototypes, first of class. And also you can claim things like software and software licenses. So
yeah, and there's a couple of little tiny things to add there, a bit once in a blue moon that we had recently, and that's contributions to independent research and development. That's only for large companies under that scheme. And something that life science companies often incur is payments to clinical trial volunteers. So it can be quite important to life science, animal science companies.
It's a new one to me.
Yeah. Oh, right. Yeah.
Every day's a school day.
Yeah, and I think it's interesting. I mean, Malcolm, you've mentioned this frequently to us in the office, that the revenue always expects staff costs to be the highest part of the claim.
Exactly. Yeah. They tend to see the ideal claim from HMRC's perspective is staff costs 200,000, subcontractors, extended provided workers 50k, materials 10k. It doesn't mean to say they get suspicious of anything that's the other way around. They just expect the staff costs, but often in a startup company, a lot of the R&D, for whatever reason, is subcontracted out because they haven't got the expertise in house. So it's each case on its merits.
Yeah. Another question coming in here is what about LLPs?
LLPs, well, you've got to be liable to corporation tax, and an LLP isn't. However, a corporate member of an LLP can claim R&D relief. The way it works simplistically is that you look at the profit or loss that relates to their share of the partnership profit or loss as a member of the LLP.
Yeah, that's if we're thinking of a legal limited partnership. Can an LLP also be a local learning partnership as well? Is there?
Well, you've got LLPs, limited liability partnerships.
Yeah.
We have community investment companies.
Yeah.
Companies guaranteed by basically there's no shareholders.
Yeah.
So the basic thing is the company or the entity must be charging all the corporation tax.
Sure. Yeah, we'll take the details of the persons. That's that question, just to make sure we're getting the right understanding of what you mean by LLP, just in case there's a local learning partnership or a limited legal partnership. We'll get back to you on that because that's quite an interesting question.
The key is corporate member is the main thing. Yeah.
Okie doke. So moving on, just a couple of funnies that are out there. So as we've mentioned earlier, some grants for job creation and safeguarding. How does this impact our analysis? We've seen a couple of examples recently where, in fact, it's in Wales, Welsh government grants, where they are trying to give out money to companies to safeguard jobs. And the question then is, if those jobs that are being safeguarded are doing R&D, what's the impact? And I think in this situation, it's almost a case-by-case analysis because it can be complex because, is it relating to R&D? Is it relating to safeguarding a job? It's a bit grey, and usually the paperwork and actually what the company's trying to achieve could be a bit more important there. So
absolutely. A Welsh government one we've seen recently. We looked at the paperwork, 25, 30 pages, loan. I think the company got something over £500,000 in total. Loan. So we started to yawn, got to about page 24. 250,000 of it was a state aid.
Yeah.
We were just about to give up and say it's only a loan. So it's important that we actually use our expertise in analysing exactly what it's for and what's received.
Yeah. Excellent. And then final one, CapEx grants. Nice and easy. R&D is all about P&L generally, so profit and loss, revenue, expenditure. Obviously, we don't really look at CapEx because it's a capital item, sits on the balance sheet. We're not really that concerned about the grant. So hopefully, no impact there.
We've also seen grants for land and buildings. Again, we've been able to discount that. So.
Yeah. Okay. So I thought, since we've got Malcolm here today, we can sort of ask Malcolm to go back 2 to 3 years when he was at the Revenue and maybe talk a little bit about how you used to review R&D tax relief claims, especially if they had some grant income.
Thanks, Al. In my youth at HMRC, Innovate UK were Technology Strategy Board. So some of your grants may still show that annotation. Basically, grants for HMRC are quite a relatively easy hit in terms of them bringing in yield. We have to remember that HMRC have a target every year in terms of compliance yield to inquiries, etc., that they need to meet. And grants received by a company are a fairly easy potential hit. And so when I'm going through a set of accounts, quite often I'll have a summarised P&L and I'll see other income. So I'll trudge off to the detailed P&L and or look for any grant information and notes to the accounts. And if that other income is unexplained from my HMRC perspective, I really wanted to know what it was. Sometimes it's further explained in the detailed P&L, rebates, insurance claim, that sort of thing. So we really need to get to the bottom of that, and that's where HMRC really chuck in. Incorrect treatment of grants can lead to entire claim being reviewed. Thanks, Al, that third bullet point. If you look at HMRC's website, you'll come across a particular page that says, even if you received a grant, you can claim R&D enhanced credits. What they mean is the large scheme, RDEC. You have to be careful there because it seems to implicate or emphasise that you might still be able to claim on the SME relief scheme. So you need to be absolutely careful. And this is, again, where our expertise comes in. Yeah.
Definitely. And it might be the case that, a grant can be seen as a red flag. There could be absolutely nothing wrong with the claim. There's a grant there not being picked up, but then the Revenue might then start to investigate it more fully, look at things like percentages being claimed, look at actually the underlying project. Is it R&D? I hesitate to use the word interrogate the competent professional.
Red rag to a ball, I was going to use. But...
Yeah, red rag to a ball. Yeah, yeah, definitely. So, you know, I think the key message here is get your grants right. If you don't feel that you can get your grant analysis correct, then please refer to us. As an R&D tax consultancy firm, all we do is R&D tax relief. And as I said at the start of the presentation, our relationship with accountants is incredibly important to us. We are here to basically help you guys take R&D tax relief to your clients. We charge a contingent fee, which is 20% of the benefit that we create. And when we pay back a portion of that fee to you guys for referrals into us, you know, effectively as a thank you, but also to take account of some of the time that you would have spent in talking to the client about us, maybe sharing accounts and things like that. So, you know, we are at the end of the phone or an email, and we are here to help you guys. As a summary, I think I'll just shoot through this so we can have a bit of time for Q&A. So, you know, this is just going to re-emphasize some of the points that Malcolm has raised and which I've raised as well. It's really important to know what grant a company has had and when they've received it, and know what that grant is for, what project does it relate to, and what the costs are for that project. And as Malcolm said earlier, grant income can sometimes be quite hard to spot. So you might ask a client, have you had any grant income? They might say no, but later on it might become apparent through the revenue investigating that there is a grant out there. So it's always worthwhile checking to see if there's anything like other income showing, or somebody's giving you data on other income to find out exactly what that is all about. And making sure that companies know about the impact on R&D tax claims of grants. It's really important, this, because, you know, nobody wants to receive bad news, especially after the fact, where somebody's claim might be limited because the grant analysis wasn't correct. Obviously, get the grant documentation if available. You'd like to think that's available, because it's quite a long, drawn-out process in terms of applying for a grant and also doing the paperwork to then receive the money. So that's a really useful source of information, because it should give you things like good, competent professional info. The competent professional is the person at the business, at the client, who really knows or understands the R&D. And it gives you lots of nice project details as well about, you know, what the project's, what the grant is for. So, 45 minutes in.
Perfect timing.
Perfect time for Q&A, and I hope that's given everybody some much needed information on R&D tax relief and the impact and interaction with grants. I think it's really important. So, so hopefully you've all gained a little bit from that.
Yeah, we do have some questions to go through right away. What I would say is, obviously, if you have specific questions relating to grants and the implications on R&D tax relief claims, please get them in. But even if you've got anything just more general, you know, we're more than happy to take those. And on that, just because it was the very first question that came in, I will ask it. You mentioned right at the very start, Al, about tax relief rate for loss-making companies for year-end 31st of December 2017. Do you know off the top of your head?
If it's a loss-making company and it is still loss-making and there's sufficient losses, it would be worth 33%. I am 99.9% certain that would be the case. There is a little bit of a tricky sort of calculation that's required right at the end to work out how much of the loss can be surrendered for a credit. But I'm going to I'll stake my house that it's going to be 33% in this instance.
Yep. We've also got a lot of people asking if they can have copies of the BIS guidelines. If anyone else does want them, if you just pop in the question panel, just, you know, send me the guidelines. We will get them forwarded on to you. Another question that we had come through is, does a self-employed subcontractor worker's costs qualify for SME relief, or is it only available for RDEC?
Right. I read that question first off, and I wondered if it was a question along the lines of, can a self-employed person claim R&D tax relief? The answer is no. But under the large scheme claim, yes. If you're a company and you subcontract out part of the project, if you're a large company under the RDEC scheme, you subcontract out to an individual then that can potentially come into the claim up to 100%. But if you subcontract as a large company to another company, then the answer is no. But if it's a sole trader partnership or other institution or whatever, like a NHS trust or a university, then yes, you can actually claim as an individual up to 100%. So if you spend £100,000 on a self-employed person to help you with your R&D, you can claim up to 100,000, depending on how much time they spend on the R&D in the project.
Yeah, good question. That's actually quite at the edge of the sort of the technical detail.
It is. Yeah, I sort of picked it up the wrong way first off. Can a self-employed person? And the answer is no.
Yeah.
I did that question once in HMRC, and I just passed it off to the Treasury. No was the answer.
Another question that I've got here, I think I know what this is relating to. Someone has asked, do you think that 57% of SMEs qualify for R&D tax relief? And I think there was an article I seen just maybe 2 weeks ago where someone was suggesting that 57% of the SMEs in the UK are owed R&D tax relief. So I'm guessing it's probably relating to that. What's your thoughts on that?
I think that seems pretty high. That seems really. I don't know how many SME companies there are in the UK. I'm guessing a couple of million.
It's like 3.5 or
3.5 million.
Yeah. I would only say that there's a lot of figures and statistics out there, and I can remember one R&D provider once saying to me, "Oh, every company is probably doing some R&D," and the answer is, "Well, no, they're not." So the actual percentage is probably not actually known without a big survey. But as I said earlier, don't discount any sector. There's only very few exclusions in the BIS guidelines: arts, humanities, and possibly maths. And remember that, for instance, a good example of a company you wouldn't think was doing R&D is an online clothing retailer. They buy the clothes in, they sell them on, but they had to develop an e-commerce platform and integrate all their suppliers into that e-commerce platform. So that's sort of slightly away from their trade, but it's a good example of thinking about every sector within reason.
Yeah, I would definitely agree. I think an experience we've had with working with accountants over the last few years, we've certainly been able to help them to identify more clients that qualify, but not as many as 57%. No. Maybe 10-15%. Would be a
I think so.
Push. 57 is a lot.
Well, we hear a lot about sort of if something's not readily deducible by the competent professional at the company, then there can be R&D. I always like to translate that into if the specialist, the competent professional, etc., starts scratching their head, then that's when R&D can possibly start. But this is what Forest Brown investigate when we speak to clients. Their expertise, their qualifications, etc., how they keep abreast of the sector, and also when R&D starts and finishes.
Yeah, and I think what's interesting as well is just looking at the inquiries that we see on R&D tax claims. A lot of accountants have done claims themselves in the past and got a little bit stuck at the inquiry stage and asked for our input. I think the trend these days is that the inquiries are far more focused on, is it R&D, rather than what used to be perhaps a couple of years ago, how much is being claimed. So the revenue are sort of thinking maybe there's a few unscrupulous claims going in, and they want to really sort of investigate whether it is R&D or not. And those inquiries are quite difficult to actually close because if an inspector comes into a meeting thinking something is not R&D, then to try and win him over to say it is quite a battle at times. So coming back to round about that 57% of clients, I think a lot of those 57% of clients, if they put a claim in, might see themselves on the end of an inquiry with a inspector being skeptical towards the actual R&D itself.
A couple of little bits of anecdotal information there. Revenue is making tax digital, and so they've got the Chief Digital Information Office now, which they tend to use to consider challenging software digital claims. So they have got a bit of in-house expertise there. But inspectors aren't supposed to present themselves as competent professionals. So that's a sort of bit of armour in the chest.
Yeah.
Is that just in R&D claims?
Oh, well, Yeah. How long have I got? Yeah. Yeah. Oh, 3 hours. Okay. Yeah.
Another question that we've had is if there isn't a claim, do you charge anything? So if someone wants to speak to you, but someone has had a grant, and it doesn't go anywhere.
We'd be delighted to help. So as I said, we work on a contingent fee basis, which we only charge basically on a successful claim, and we charge right at the end of the process when clients receive their money. So that means if we have conversations with people and it doesn't actually end up in a claim, then there's no charge. So we are more than happy to talk to accountants about clients. There'll be no charge there. We're even more than happy to speak to referrals from accountants that don't lead it anywhere. We're, hopefully you might have gathered, we're really passionate about R&D tax relief, and we want to spread the word. So if you're an accountant out there and you refer or ask us to speak to 4 or 5 of your clients and they go nowhere, that's fine by us. We've spread the word, we've talked to the company. It might be the case that we can help that company think about its activities so it can claim at a later date. Average conversation with a client for us just to start with, just to do an immediate sort of bit of an assessment, probably 20 minutes, half hour. So we're more than happy to spend half an hour on the phone with a company just to chat through the qualifying criteria, find out a bit more about the company, what it's doing, work out, what expenditures there. Some companies just pay out dividends. Dividends don't qualify, but, more than happy to speak to anybody about R&D tax relief.
Yeah, I think I would concur on that. For many of the clients that we've passed to you guys, there's been a conversation and it's maybe turned out that grant at that point in time was the best option, or that maybe it's a new company and you've been able to give them some advice on what they should be doing in terms of record keeping, the type of things that can be claimed for, which is great, and that's great for the accountants out there as well, as that you guys are more than happy to do that. So please don't ever feel that you can't give the guys a call, because they are more than happy to chat to people, and something might come out of it, whether it's 6 months down the line or 2 years down the line. But you're always happy to have a chat. So that's us pretty much in terms of the Q&A. One thing that I did quickly want to just let everybody know about, we are going to be doing a number of seminars across the UK over the coming months, which will be a joint R&D and capital allowances tax relief based seminar. So we've got a fair few of them. There's 10 across the UK, kind of between April and May time. We'd love to see you there, or as many of you as possible there. You can find out more about it by going on our website. The actual web address is at the bottom, or if you just go to PFP online and click on the News and Events tab, you can find out more about each event, when it is, and if you want to come along, you can sign up online, so it's really easy. We did one of these towards the tail end of the year in London, and it was fantastic. We had a queue of people waiting to speak with Alex and Andrew from our capital allowances team. So yeah, I would really recommend that you try and come along to that. We are pretty much at the end. If you do want to speak to us, you can either send an email to info@pfprd.co.uk or give us a call on 0330 010 4010. Just want to say thank you very much for joining us today, and we look forward to bringing you another webinar in a couple of months' time on R&D. I know that we've got another webinar coming up in a couple of weeks' time, which I should know the subject of it, but we'll be sending out details of that over the next couple of weeks. Alex, just pass to you to say goodbye.
Yeah, thanks everybody for your attention. Complicated area, so if you've got to the end, well done. And thanks to Malcolm too for his input.
Yeah. Well, thanks, Alan. Thanks to yourselves for listening, and thanks to Derek for inviting us.
Excellent. Cheers, everybody. Enjoy the rest of the day, and we will speak to you soon.